Imagine you are checking the weather. If today is 30 degree, would you expect a snowfall tomorrow? Of course not. Just like the weather follows the pattern, volatility in stock market does too. And once you understand this pattern, you start spotting mispriced option and making smart trades. Today I'm going to break down two powerful characteristics of volatility that most traders completely overlook. First, mean reversion, and second, clustering. Once you master these, you will start seeing opportunities that others never even notice. Ready? Let's dive in. The first characteristics is mean reversion. Think of it like a rubber band. The more you stretch, the more it wants to snap back. Volatility works the same way. So for example, if the stock's long-term volatility is 20% and suddenly it spikes to 30%, chances are that it will come back towards 20%. Similarly, if volatility drops to 10%, it usually rebounds upward towards the average. So what is the key insight? High volatility options are expensive. Low volatility options are cheap. This is where smart traders find their edge. The second characteristics is clustering. Ever noticed how big market moves happen in streaks? That's because volatility clusters. Today's volatility is often similar to tomorrow's. Think of it like a weather again. If today is hot, it will be probably warm tomorrow. You don't go from summer to snowfall overnight. It takes time to transition. Let's take an example. Let's say if Reliance moves 1% today, it will likely move similarly tomorrow. Not in the direction, but in the size. That's volatility. It measures how the big move is, not whether the stock will go up or it will go down. So what is the key insight? High volatility period usually stays volatile. Calm volatility period usually stays calm until something big shakes the market. So why does all this matter to you as a trader? Because when you understand mean reversion and clustering, you gain a real trading advantage. You start spotting the mispriced option. You avoid getting caught in random trades. And you trade based upon probability, not prediction. So final thought. Most traders focus only on price, but the pros, they trade volatility. And now, so can you. Let's put your knowledge to the test with a quick quiz. Question number 1. What is the concept of mean reversion in volatility? A. Volatility always increases over time. B. Volatility tends to return to its average over time. C. Volatility stays constant regardless of market condition. Or is it D. Volatility moves in opposite direction of the stock price? The answer is B. Volatility tends to return to its average over time. Question number 2. What is the analogy used to explain mean reversion in this video? A. A car driving downhill. A rubber band snapping back. C. A ball thrown in the air. Or is it D. A bicycle moving in the circle? The answer is B. A rubber band snapping back. Question number 3. What does clustering in volatility mean? A. Volatility becomes unpredictable after a major event. B. Volatility tends to be similar to the previous day's volatility. C. Volatility increases as the stock price goes up. Or is it D. Volatility is random and does not follow pattern? The answer is B. Volatility tends to be similar to previous day's volatility. Question number 4. How is volatility similar to weather according to this video? A. Volatility changes rapidly with no patterns. B. Volatility behaves like the stock price going up and down. C. Volatility clusters and follow the patterns like weather. Or is it D. Volatility is constant just like the weather? The answer is C. Volatility clusters and follows the pattern just like the weather. Question number 5. What is the key takeaway from understanding mean reversion and clustering? A. These concepts helps you predict the stock prices. B. They help spot mispriced options and make smarter trade. C. They eliminate the need of analysis in trading. Or is it D. They are irrelevant to option trading? The answer is B. They help spot mispriced option and make smarter trades. Share your quiz score in the comment. I'll personally check them and help you improve. If you found this session helpful, share it with someone who trades option without understanding volatility. In the next video, we will dive into 3 circles of volatility. Until then, keep learning, keep winning.